All right. So, guys, hey, so I just wanted to give you guys a quick update on the Microsoft and Apple Jenkins reversal, square root reversal points that we're getting lately. So, we actually on Microsoft have one pointing to today. So, possible downtrend on or pullback on Microsoft starting here, or even something more than just a pullback. We'll see. And let's get what our next reversal point should be with Microsoft. So it should be this plus 0.25, if I'm correct. Yep. Okay, so the next reversal should be, should be 438 days from a specific low. Just wanted to remind you we're going off of, for this one, we are going off of the low right here. I found this one to be a very good low, but I could have used pretty much any of them. But so we're going from the March 8th of 2022 low. Square root of that low price is 16.4316767252. And so when we re-square that, adding 0.25 increments to that number and re-squaring, then counting forward from that date in days, we are getting all of these reversal turning points here. Not always perfect, but because this one was off by a day, actually was pointing to this top. So sometimes they'll be off by a day or so, but most of the time they will be right on the day. And so as you can see, it predicted this day where we had a little bit of a pullback, and then it trended up again. It's not going to catch every single reversal, but every time a date comes out, expect a reversal pretty close to that date. So again, possible reversal going forward with Microsoft this week. And anyway, let's see what the next one is. It should be 438 days later. So that should be 520. So I'm going to put a vertical line on 520. Well, 520 Saturday, so we're going to put it on Friday the 19th. And so we are then expecting another reversal on Microsoft on Friday the 19th or on Monday the 22nd. We're very close to that. Should be one of those 2 days. If it's not Friday, they probably run the buy or sell stops on Monday, and then they reverse it from there. Okay, anyway, so that's Microsoft. Now let's go to the one and only AAPL, Apple stock. Let's see where we're at right now. Oh, man, we've gotten some absolutely beautiful reversals with this lately. As you can see, for this one, we are using the highest price Apple stock ever got to. Now, again, even though they've used stock splits, these values are still proportionate, obviously, so they still work. So we're taking the high price of $182.94. The square root is 13.5255314,129, and it occurred on January 4th of 2022, which was a Tuesday. Okay, so what do we have lately? We've gotten pretty far forward in numbers from there. We're in the eights. We're about pushing into the nines, right? Next cycle after this one's going to be the nine. So as you can see, we had a reversal here, reversal here, reversal here. This one, I'm admittedly was a bit off, but what did they do? They just ran some sell stops for about a day or two, and then they took it up. This one, spot on. Spot on. Look at that. Huge gap up the next day. If you'd been prepared for that with a long position, you could have made some serious bank. Although, it's a little bit hard to say because maybe it could have been off by a day and it would have been pointing to this top. So it's hard to say on that alone. But obviously, if you've been paying attention to the few videos I put out so far, we know that we're in a bull market. At least I believe we're in a bull market. So again, with this, in the context of a bull market, you'd be looking at that as a pullback low, expecting prices to move higher most of the time, right? Okay, so anyway, next reversal for that will be Monday the 15th. So what do we have? We have Monday the 15th of May for Apple, and then back to Microsoft, right? Friday the 19th. Okay, so those dates are not lining up, so that might give you multiple reversals if you're looking at QQQ or the S&P. Anyway, so and feel free to try these methods on other stocks. I've found that on Tesla and Amazon it doesn't work as accurately, and I wouldn't not do too many stocks if I were you, because you can inundate yourself with too many potential reversal dates. I stick to Apple and Microsoft because they are the leaders of the blue chip stocks in the Nasdaq and the S&P 500. Maybe you want to look at the Dow Jones, take what the top weighted things are in there. Maybe you want to do Berkshire Hathaway or something, or you know, maybe do a different, like, a different corporation that's high up in uh, the Dow Jones. But anyway, moving on from this, what is the point of this video really about? So what I want to do is warn you guys. I've been making videos about this before, but I wanted to make a little bit more professional video about it. What are we worried about, guys? If you go on YouTube or anything and you're watching some sort of financial advisor, what have you been seeing lately? You've been seeing advertisements. I'm just going to Robinhood because I'm going to pull up a page that can show you what I'm going to get at. But there's all these new um, bank or like bank subsidiary companies basically that are promoting these 4%, 5% APY savings accounts. And on top of that, there's also a lot of money market funds being promoted since probably about October. And so, what is that all about? Well, they're telling you to basically bet on savings. So, let's go to the dollar, okay, and tell you, and let's just go over why you should not be. First of all, just fundamental, or for technically, from a technical perspective, why you should not be bending on the dollar. Okay, look at where it's trending. Okay, it had a big uptrend since pretty much since a little bit after Biden got elected. Um, Big bull market for the dollar, and now we are on the backside of that bull market, right? So I know we technically did just take out sell stops from here, so the market does have permission if the banks and the Fed really do desire, they could take the dollar up from here. Personally, even if it goes up a little bit, I am not really looking for that. Especially since here, as you can see, we took out buy stops there and then moved down lower. So, I mean, hard to say either way. From a pure technicals perspective, but personally, to me, it looks like a downtrend. But from a fundamental perspective, let's look into why I believe that savings and money market funds are bad and why stocks are good. Okay, so I know this is not a popular opinion right now. If you look at many of the fancy or the more popular financial YouTubers and the news outlets, they'll be telling you the exact opposite of this. And again, you should look into my other videos explaining a bit more about why you should basically be doing the opposite of what they're saying. And the short of it is that they're basically in bed with the banks, and the banks pay these news outlets and stuff to basically promote a false narrative because the market is a zero sum game. Any market, any asset class, it's a zero sum game. Wealth is a constant and it only gets transferred from one person to another. Okay, we can't all win. If I make money, the next guy's, I took it from the next guy, right? Out of the market. It's a zero sum game. What goes in goes out. If you lose money, it goes to someone else. If you make money, it came from someone else, correct? So the banks basically use news outlets and even influencers on social media, YouTube, they pay these guys. Like, again, if you've watched like a YouTuber and they promoted like a savings account or something, think about, you follow that up to like maybe it's a smaller bank that you've never really heard of before, like a Wealthfront Capital or whatever, and basically you'll be like, okay, well they don't seem like they have some sort of big power over price. I can trust this bank, right? But the thing is they sweep that cash to the program banks, and the program banks, if you look, they essentially are all the same. The program banks are the same no matter what savings account you use. Look at where the cash gets swept to. These are the banks the cash gets swept to. Okay, so do you see any familiar names here on this list? I do. Okay, so basically you're giving your money to these banks. Okay, but the thing is, these same banks have the power to drive price down, right? And so let's talk about what happened here. Here, basically, I'm just going to put a big circle there. During this period of time, or I'll make it a little smaller. During that period of time, there were a lot of articles coming out promoting money market funds, savings accounts. And since then there have been as well, but that's when it really started coming out. I even got mail, like physical mail, like inviting me into savings and stuff. And I started getting emails from these subsidiaries of like Goldman Sachs or whatever. Goldman Sachs, again, program bank, inviting me into a savings account. And that's when I knew that, at least for the foreseeable future, that the bear market for stocks was over, and that the bull market for the dollar was also over, right? Because it's a zero sum game. So they're not going to invite you into a savings account, promise you a high yield, and actually pay that out to you. Because what they're going to do is they're going to pay it out to you, but they're going to drive down the price of the dollar so much and drive up stocks so much that they make so much money by keeping you out of stocks and also betting against your dollars, that through the zero sum game, even though it's more of a roundabout way, they basically make money off of you still, and they take away your wealth. Now, again, this is where inflation comes into play. Basically, the dollar gets inflated, so your bank account might, even like at the end of this year, it might have you might get 4% on your cash, and you might have more dollars than you did at the beginning of the year. But with inflation and stuff, like, again, it's all going to balance out, and it's you're not actually going to end up with a net increase in your wealth. You're probably going to end up with a net decrease in your wealth. Again, not financial advice. Go do your own due diligence if you want to use a financial advisor or whatever. But again, just remember that at the bank, if you have a financial advisor working with one of these banks, they're trained to tell you that the opposite of what I'm telling you, right? And they don't know any better because they're just someone working on their career to like climb up through the corporate ladder of working in a bank, right? So my personal opinion, though, is like it is backed by this evidence that, okay, articles come out promoting savings accounts, money market funds, dollar goes down, and then the stock market starts going up, right? So basically, the last retail and investors and, like, more wealthy retail investors through mutual funds or, what am I talking about? Hedge funds or, whatever, financial advisors and stuff. That whole sea of less informed financial advisors and stuff who are trained to basically make the wrong play, those people and all the people investing with them, and then also all the individual retail investors following news articles and stuff, and the false opposite technicals and fundamental narrative that's spewed out as lies. Once they get all those people out of their losing stock positions, they finally get all those people to liquidate around October through December of last year. Then the banks no longer have to share any piece of the pie of the stocks that they're about to start taking up, right? So again, they get all the people out. They basically, what I've deduced is that the banks take the retail investor, whether they're using a hedge fund or a financial advisors, or they're just following the news and public opinion. They basically just continually take those people from one slaughterhouse to the next, and then while they're in that slaughterhouse, the banks construct the next slaughterhouse that they're going to lead them into there. And basically they're going from losing money to losing money to losing money to losing money. And that's how the stock market works, because it's a zero sum game. The banks have to do this. They make profit, right? Look at a bank's track record. Look at the top banks' track records. They all generate profit, right? Well, that profit comes from somewhere. You and me or whoever we have to lose that money to the banks in order for them to generate profit, right? It doesn't just grow on trees or come out of thin air. They have to literally take people's money. And the only way that you can really take someone's money is to lie to them and trick them and convince them that an investment that's going to lose the money is going to make the money, and then you're betting against that secretly around the corner with your buddies. You're betting against that, right? So, like, you're making the difference, but you need to get more people to place more bets against what you're betting on in order to have more liquidity, facilitate trades, and also so that you have more money to make from the difference, all those losing positions. Because again, it's a zero sum game. So the more bad plays that they can have open positions from people, the more money that they have going into the market for the wrong side of the trade, the more they stand to make on the right side of the trade, correct? That's how this whole system works, okay? It's a big fat lie, okay? And it's really sad. Um anyway, so that's kind of what I wanted to get into. I basically laid it all out for you. I just explained it. It's yeah, it's a zero sum game. And so anyway, my personal belief is that stocks are going to continue going up. Now, again, we're about to take out some buy stops, so we could see a pullback. It's technicals are they're much more difficult game to play, and if you don't understand the fundamentals I'm explaining, then it's going to be a really hard game to play because you're not even going to know why. At least now I'm giving you the why so that you can work with that. But just remember, in a bull market or a bear market, there can be long-ish pullbacks. But even if you see stocks go down in the near future, do not be tricked into thinking like it's a bear market, it's all going to crash. Okay, because that's the narrative that's promoted on the news. So like they can't allow that to happen, because think of how many uninformed or like non-skilled traders and investors are betting on stocks to crash, like blue chip stocks to continue crashing and bank stocks to crash and all that, right? There's too much retail money betting on that side. Okay, Vegas, the casino has to bet against them, right? That's how it works. It's like this. Think of this as like kind of like being a sports book. Okay, if you ever done anything like that, it's a very similar concept to a sports book. Uh, Especially if you look at the way that options premiums are priced, like you will see mispricings in the options and stuff, and it's the same with like sports books. Like you'll see like it's not like there's always a piece of the payout that's unavailable for you to acquire, basically because the house has to win, right? They will skew it so that it's like, even if you make, no matter what, like if you make the right side of the trade, like if you stand, like there's still a piece missing of that you should get. It's not like a team with like with a 2-to-1 payout. They won't actually pay out 2-to-1 in the sports book, right? It'll pay out slightly less, right? And the team that is 1-to-2 will also pay out slightly less. It's not straight. It's not flat even, right? So again, the whole thing is a rigged game. It's not. It's harder. Like you already know that trading is one of the hardest things to do, and investing is pretty hard. It's even harder, trust me, because once you understand that it's rigged, it's like pretty hard. Now, on the flip side, though, if you get good at technicals and stuff, um, on top of the fundamentals, then you stand to gain a lot, and it's actually one of the more profitable, potentially profitable casino games out there, just because it's more possible to have an edge, although it just takes a lot more work to gain that edge. So better than being in a casino, but going to take a lot more effort and work in order to be profitable at this casino, right? And you won't get backed off this casino for being right. Um, and that's, in my opinion, mainly because of stuff like commissions, right? So again, you have to pay. It costs money to place bets in this casino, so they're not going to back you off because they're going to make money off you one way or another. It's just like either you're going to make, people are going to make money off you from commissions, or they're going to make money off you from commissions and losses. So, but there are stories of like shadier brokers like shutting you down if you are too profitable, and so that's why it's better to stick with a more popular broker because they won't back you off. Like they just accept it. Um, anyway, I'm totally off track, totally sidetracked, but there's a lot to know about trading and investing. It's a very deep and complicated game, and I don't even consider myself a pro at it, but like at least I've realized these things that most people have not realized. And so what I'm doing is I'm trying to empower you with this information so that you can go on and make more informed financial decisions. But like, look at this. Does this look like a bear market? Now I admit, there was a bull run here, and then it continued lower. But again, it didn't really continue much lower than it already had, right? So this whole thing was almost like a massive consolidation that just played out very slowly, right? And so we're still kind of in that consolidation range, right? And so could stay in that range a little bit longer, but in the long run, I'm really expecting upside, more upside, way more upside, right? So, and I think like the kind of, I don't know why they did a lot of this. during this recession. That's not usually the case, but maybe it's because of everyone trading like zero DTE options and stuff, and like there's just so many people in the market, like they have to like do this kind of stuff now to like not have to pay out anyone. I don't know. I couldn't explain that fully. I don't. And again, I don't really study options that much. They're pretty complicated, and like I stick to like futures and stocks. So, but I do have a long options position open on Amazon right now. So yeah, I can actually talk about Amazon a little bit, and then I'll wrap up the video. Amazon, I think, like Microsoft and Apple, is looking very strong right now. Very strong, heavily, 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 heavily discounted price. And it looks like we're kind of trending. We're starting to move away from this deep discount, right? So it's got to strike while the iron's hot. You know what I'm saying? If you look into, I mean, I'm sure most of you guys have heard of Amazon Web Services, right? They've been around for like 20 years. The whole thing now, though, is with AI integration. I wouldn't personally bet on like specific AI stocks because like that's kind of like pump and dump stuff, right? That's like a hot sector; it'll fade. But the actual application of AI will be consumed by the top FANG, like Facebook, Amazon, Apple, Google. They're going to incorporate a lot, and they already are developing crazy AI for uses in their company, and it's going to increase their productivity by like a ton. Okay, so they rule the world already, but they're about to rule it even harder. Okay, and so if you want to place, like, this is where you put your money, in my opinion. This is the asset to put your money in, this kind of stuff. So yeah, I have an app as Amazon. I have a position for an options contract for like January of next year, and I'm already up like, well, okay, it's gonna fluctuate, but I'm already up like 60 to 70% on that options position. And I bought it like recently. Like I bought it like here during this like pullback or something. Like I think I literally was like, this is a smart money type trade to make. But I pretty much bought it down here as they were running out buy or sell stops. So I bought it below here, like somewhere around here. Um, and as they ran all those sell stops, so all those people getting stopped out, sellers getting like sell orders that are stop losses, I was buying from those stop losses, and so that's why. So I basically am up 70 or like 60 something percent on this entire move right here on a position that expires in a year, or like not a year, but like January, so next year. So that's a crazy gain for an options contract that's that far out. But again, that means price in what, and like it was going up even during these days, even when price was going against me intraday. The contract was being very solid. So what that says to me is that Wall Street considers my options contract valuable, and that means it's probably going to hold its value for quite a while and continue to grow. So again, it's at a bit of a premium in terms of the short micro, but overall macro, it's still a discount. But I would, if you're really like hesitant, I would wait for like a few red days, wait for like stop losses to be hit, and then like buy from those sellers, buy from those stop losses. So yeah, but yeah, Amazon, Microsoft, Apple, all good buys right now. And I know that's like the popular blue chip stocks, but I think they're like seriously discounted right now, and they're a lot safer investment than just about anything else out there. And again, stay like, okay, if you don't believe me, fine, keep your money in savings. Like tell me how much, like tell me how that 4% looks in a year, and how that's not going to look that good. Okay, if you're in one of these blue chip stocks that literally the banks are moving up in price, you're probably going to do a lot better. Okay, you're going to do way better than 4%, even if you just have shares. Okay, but if you buy like a long-term option contract, like you can make some serious money on it, right? Those are kind of expensive, but like not really. I mean, like Tesla. I wouldn't touch a Tesla option. Those things, like, you want to buy a Tesla option for next year, it costs like literally costs like 20 to 30 grand. Isn't that insane? Even more sometimes. It's insane. I got an Amazon contract for next year for like it was like less than $200 per contract. Which one do you think I'm gonna put on? Like, it's just crazy, man. I get it. Like, everyone loves to trade Tesla, but like Apple, Amazon, you could even just go like, oops, you could go like QQQ or like TQQQ, right? And just buy one of these. I mean, they move kind of the same as the stocks I'm talking about, right? The options contracts for TQQQ are like so cheap. They're so cheap, and you can make the same kind of gains off like the same kind of moves. So, or you just do QQQ. Those are a little more expensive, but TQQQ, look at this. The price per share of this thing is like it's $29. Okay, the options are not that expensive. So yeah, just look into that stuff. Like this stuff is a good buy, man. This is a good buy. Look at this. The stock market tends to always go up, right? I don't know why this is all like the data on this is like messed up. This is not like good data or something. Oh, these must be like splits or something. Yeah, those are splits. So they would like when the price of it gets a certain level, they like split it, right? This was like a 2-to-1. This is like a 2-to-1 again, or something. Actually, I don't know what the hell. Maybe I'm wrong because I don't know. That's weird. The data here is a little bit. I don't know. But anyway, that's not really the point. The point is that this is tracking. This is the Nasdaq, right? And the Nasdaq is basically or mostly like Apple, Microsoft. It's like FANG, right? So, and look, FANG is like people are catching on already, though. Okay, so but like this man, this I was predicting bullishness back here, and this would have been I didn't buy because like I was not. I should have bought. I knew it was going to go up. I just like was not. I don't know why I didn't buy. Honestly, I should have. I could have had a massive position on from there, and I would have made a lot of money. But I think I was just kind of distracted trying to. I know what it was. I was trying to trade intraday futures, and I still am. If you look at my videos, like um, trying to be a day trader and stuff. But like, I'm gonna be honest, guys. Like, the more I study this stuff, and there's this great trader named Kulamaji, and he kind of said the same thing. Is that basically what I've learned is that in day trading, the best you can make is like 2-to-1, 3-to-1 risk to reward on a trade, and when and so that means that requires like a higher accuracy, like higher strike rate. But the thing is like there's this trader. Look him up, Kulamaji, Kullamagie. Okay, he's this Swedish guy, and he turned to like 10 G's or less, like 5 to 10 G's, into $100 million in 10 years. And he started making good money when he gave up on day trading and started swing trading. Like he basically trades the daily chart, right? I mean, he'll look at like the hourly chart or whatever for like entries and stuff, but he's trading based off the daily chart, and he gets like 1 to 10, 1 to 20 risk to reward, right? And he only has like a 25% strike rate. But if you're getting 1 to 10 to 1 to 20 on your trades, then a 25% win rate is insanely good, right? So day trading is a lot easier. I mean, sorry, intraday. I mean, interday swing trading is a lot easier. And even Goldman Sachs said themselves that like day trading is really hard. It doesn't mean you can't do it. There are people who can do it. ICT can do it. I've had some success with it, and I'm still gonna keep trying my luck at that. But I'm back to paper trading with that just because it's so ruthless, dude. The intraday fluctuations are insane. But again, I just put on a good Amazon position at the right time on a daily chart, and I'm up almost 70% on it. So like, which one's easier? Which one's less stressful? Like, which one has like actually has a higher payout? To me, it's probably taking on swing trades or like long-term positions, like a Warren Buffett type deal. Maybe a little bit more hands-on with it, but it's the same premise. Like, trade the higher time frames. They make bigger moves. If you and the technical the lower time frames are way more chaotic. Like okay, this Jenkins stuff. I know I've drawn. I promise I'll let you guys go after this. But so this kind of stuff, this works great on a daily chart. Man, I've tried I've tried to do this stuff on intraday charts. Sometimes you'll get a point that's like the exact high of day, but dude, like it's oh my gosh, it's like a freaking minefield. Trying to do this on a 1 minute or 5 minute chart is like It's hellfire, dude. Like this stuff does not work on those lower time frames nearly as well. So again, what is that all pointing me towards? It's telling me stop fighting it, stop trying to be this raw day trader, and just look to take on massive positions like long term and make swing trades that last 1 week, 2 weeks, or 8 months or whatever. Right? Hold for the long haul. Don't be worrying about all these little intraday bank fluctuations that are like all this algorithmic stuff. Like, how are you going to really beat that? Like, you can, and again, you can read ICT, learn ICT, and do that. But the thing is, again, the payouts are like, from what I see, it's like literally at best, like you're getting like a 5 to 1 on like a best day. It's usually like a 2 to 1 or 3 to 1 risk to reward ratio on a day trade, whereas on these charts, you can get 10 to 1, 20 to 1 risk to reward, and you can have things as good as like a 25% strike rate, maybe even higher if your fundamentals are really that good, right? I mean, it's the same technicals, it just works better. It's easier to trade a daily chart, and that's where the money's at. So, and again, that's what again, algorithms work on very small time frames, but they also work on very large time frames, and the banks themselves are looking at like the overall large trend. That's where the big money moves are making, right? They're not trying to manipulate the news, like change the news manipulation every day. They're saying savings account, money market fund, and this is the result of that. Think how much money the banks just made off this. They probably made some of the most money they've ever made off this bull month, off this right here. Because think of just how many people provided liquidity via savings accounts and stuff. That might be you. Again, you can disagree with me. If you think savings is safe, again, it's probably better than just sitting on your cash, like with not doing anything with it. It'll depreciate like 4% more slowly. Okay, that's fine. If that's all you if all you want to do is slow the bleeding, that's better than nothing. But again, why would you do that when you could like buy these blue chip stocks? Like you already know, like Apple, like people. I know some people think Apple's not going to be around in like a long time or whatever. I beg to differ. Amazon, I beg to differ. Amazon's going to be around. Microsoft, these companies didn't get to where they are, doing nothing. These guys do legitimate. They have very profitable business models. I'm not saying they're ethically good companies, but they have very profitable business models. And again, who knows who will come out on top down the road? There will always be some other company coming up to join them, but it's going to take quite a lot to make this company go away. And Apple's becoming a bank now, right, with their Apple Cash and stuff. So Apple's literally going to take over, okay? And they already have. Look where my microphone is. It's an iPod. Okay, anyway, I've droned on long enough. I hope you guys enjoy this video, and please like and subscribe if you like it. If you have any questions or disagreements or concerns, like comment, just anything you want to engage with me on, this is just a small channel and I'm building it up. And yeah, I just want to engage with you guys, and we can start to just learn how to make money the real way instead of falling for all this crap that's not going to make you money. So anyway, I'll catch you guys on the flip side. Thanks for watching. See you next time.